Hello there. Welcome to Financial Accounting. In this video, I want to look at the concept of a provision for credit loss. So, provision for credit loss, you'll see that it's an expense set aside by businesses to cover potential losses, usually on debtors. And you'll see that this is done to protect our businesses from potential credit losses. So, the business usually set aside in terms of a proportion, that is a percentage of the total trade receivables figure that will be there for the period. So we are saying it's set as a percentage and then we calculate it. Then in particular for this video, we want to look at the treatment of provision for credit loss in the financial statement, that is in the income statement. So you'll see that the calculation that we are going to do, we are going to base on the past exam paper, that is the question paper that we have here. You'll see that after calculating the provision for credit loss, you are going to get the level of provision for our bad debts or credit loss for the period. And then we notice if there is an increase of that level of provision for credit loss from the previous period, or there is a decrease. So we are saying if you notice that there is an increase, this is an expense, and we are supposed to put it under other expenses in the profit and loss account. And then if we see that there is a decrease, we would see that this is now an income that we need to put under the other income section in the income statement. So a decrease represents an income. So we are supposed to adjust it under other income. But the basic thing that we have to know about provision for credit loss is that it is a non-cash. It is a non-cash item. In other words, it's a provision that is set aside, but there's no actual cash movement out of the business or in the business. When it's an expense, we are saying there's no cash movement out of the business, and it's not a cash outflow. And then if it's a decrease, since we are regarding it to income, there is no cash inflow. It's not cash item. So you see that in the when you go to the cash flow statement, we are not going to adjust for a provision for credit loss because we are saying it's a non-cash item. So going to our question now, let's just try to go there and see what we have in terms of the question that we have. So you'll see that we are given a question that reads, a junior bookkeeper. As a junior bookkeeper, you are supplied with the relevant information of Bonani traders for the end of 31 December 2021. So the question requires us to prepare the statement of profit or loss and other comprehensive income for the end of 31 December 2021. So we are just going to go where we have the figures of our trade receivables, and then we check in terms of how do we calculate the provision for credit loss for that period. So if you come here, I will see that we are given our trade receivables figure here, which is 21,350. So this is the level of our trade receivables control for the period. So in other words, now what we are supposed to do is we are supposed to go to additional information and try to see the level of provision for credit loss that we are supposed to use to calculate. So if you come here in additional information, you'd see that we have, let's just try to see in terms of the level of credit loss. We are here on item 9, which is saying create an allowance for credit loss at 5% of trade and other receivables. So we are going to say 5% of trade and other receivables, but we need to see if there's any adjustment again in the question. You need to check for that if there's any adjustment in the question that is going to reduce the figure for the level of our trade receivables that we have in the question. So if you go up there, you'll see that we also have an adjustment number 5, which reads an additional amount of 350 rands must be written off as irrecoverable. So if you have such an amount, you have to first subtract it from the figure that are given in the trial balance, and then the net figure that you get now, you now say 5% of that net figure. So if you come here, you'd see that we are saying the 350 that is further written off, we subtract it from 21,350, and then the net figure that we get, we are supposed to calculate by 5%. So we are just saying, coming here, we are now saying 5%, which is 5 over 100, and then we multiply by the net figure, we're saying 21,350, and we subtract by further 350, we subtract further 350 that was written off, And then if we simplify it further, we know that if you say I have 125, you're going to get your 0.05. And then here you put 1,350 and 350, you're going to get your 21,000. So you calculate it, and you see that the final figure that you are going to get them will become 1,050. So 1,050 becomes the level of provision for that this level of provision of doubtful debts or a level of provision for credit loss for the current period. So we compare it with the level of the last period to see if there's an increase or decrease. So the level of the previous period you are given, it will be given it in the pre-adjustment trial balance there. So if you go there, you'd see that we don't have any thing to do with provision, which means there was no provision for credit loss for the previous period. So what we are going to do is we are going to what it means is the provision for credit loss for the previous period was zero. So basically, if you come here, we are saying it's coming from 0 and then going to 1,050. So we are going to have such a movement here. So obviously, this is going to depict an increase. And we said if it's an increase, it's an expense. So we are going to put in our profit and loss account or in our income statement under operating expenses as provision for our credit losses 1,050. So 1,050 becomes the expense part because this is an increase. So disclosure again in the balance sheet or statement of financial position, we are now going to say the level that we provided, we subtract it from the we subtract it from the net figure for trade receivables. So that's how we are going to present it. So in the balance sheet, that is the statement of financial position. We are now going to say the net figure that we got there was at 20,000. This is our level after reducing the further writing off of our credit losses. We are going to say 21,000. 21,000, and then we subtract the current level of provision for credit loss 1,050. So the figure that is now going to the balance sheet will be 21,000 minus 1,050. So we are going to say 21,000 minus 1,050, and then are going to get your the figure that you are going to get is 19,950. So we are going to get your 19,950. So here we are saying 19,950. So this becomes the figure. This figure is the figure that now is going to the balance sheet after I've subtracted the current level of provision for credit loss. So in the income statement, we are going to put our 1,050 as our expense, as provision for credit loss adjustment. So this is what we have, guys, according to treatment of provision for credit losses in the financial statements. Thank you for listening. Let's meet again in the next video.